Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Passed in Lok Sabha, although that was merely a formality, but it's finally passed, and we'll be talking about this a lot in today's episode. This is Coffin Crypto. I am Arun Singh. A very warm welcome to this special episode. So, amendments to the Finance Bill 2022 were moved by Finance Minister Nirmala Sitharaman. Finance Bill 2022 is the same bill that included taxation of cryptocurrency in India, or as it was termed as virtual digital assets, or VDA, in the bill. The government proposed 39 amendments in the bill. Let's take you through what Finance Minister said about cryptocurrency. So first, she said consultations on cryptocurrency are going on. When asked about regulation, she said it will be a regulated or banned that will be clear after consultation only. But as far as taxing cryptocurrency or digital currencies are concerned, lot of reported activity or transactions are happening. Hence, it is very important to put TDS into place, and that is why she says that we have come with a proposal which is putting TDS on transaction, which is one way to track the overall transactions.
So on virtual digital currency, a lot of members have spoken. One aspect which was raised was government is giving a mixed signal. There doesn't seem to be a clarity. And this was raised by quite a lot of members. Supriya Sule ji raised it. Ritesh Pandey ji raised it. Pinaki ji raised it. So I just want to say, there is no confusing signals. We are very clear that there are consultations going on as to whether we want to regulate it, as to whether we want to regulate it to some extent or really very much, or totally ban it, are all after the consultation, which will be concluded, and once it's concluded, the matter will come out.
Now, there were voices for and against cryptocurrency in the parliament, like BJP MP from Godda, Jharkhand, Nishikant Dubey, said that cryptocurrency is being used to pay bribes and it is also being used for laundering money. On the other hand, Pinaki Mishra, which is he's a BJD MP from Odisha, and he's also a member of Standing Committee on Estimates, said that the current government has created a notion that dealing in cryptocurrency is a sin and created so much confusion on cryptocurrency. Listen in.
Today, to ban cryptocurrency is the equivalent of banning the internet. It is an idea whose time has come. So I'm vastly surprised that somebody as sharp as Nishikant Dubey and Supriya Sule ji are advocating a ban in this country. What this government has in fact done by this, the notion of a sin activity, it's as though cryptocurrency dealing is something sinful. What the government has done with that is created so much confusion, and unfortunately the RBI governor, who's one of the brightest and best bureaucrats of this country, has seen, he has gone on record to say this is just hot air. So therefore, there is complete confusion. There is hot air on behalf of the RBI governor, who is in charge of issuing digital currency, so which will be equally, I think, hot air, and the government which wants to therefore tax the hot air. And the government has gone on to a 30% slab on the basis that it must be at a higher listing than equity gains, because it is some kind of sin. The 1% TDS, again, lakhs of transactions taking place on a daily basis. Industry was saying, yes, you want to trace, you want to track, have it at 0.01%. Instead, the government goes on to 1%, which is 1,000 times more. So therefore, these are, again, it's symptomatic of complete confusion in the minds of the government, unfortunately.
He seemed a bit emotional talking about cryptocurrency, and several crypto investors or enthusiasts are also emotional about a recent announcement that was made by the government. And this is about how losses from one crypto asset can't be set off against income from another version of cryptocurrency. And we have some more details on that front. For that, we'll go to our coffee wall. So, set of clarification had come in the last week itself. The government disallows setting off losses incurred in a particular digital asset against income from another version of a crypto holding. Minister of State for Finance Pankaj Chaudhary had also said this on 21st of March in the Parliament. Now, giving more details about this, he said tax breaks on infrastructure costs incurred while mining of crypto assets would not be treated as cost of acquisition. Now, this sounds very technical, but what he essentially means is, so usually when you start a business, you have a cost of acquisition, which can be deducted while you are claiming, your tax. But in this case, mining cannot be treated as cost of acquisition. You won't get any deductions here. Now, current legal status of cryptocurrency in India was also asked as a question in Lok Sabha, and the answer was that currently cryptocurrencies are unregulated in India, something that we already know, and we've been talking about this on this show as well. Now, several investors have some queries, or I was also going through some FAQs online as well, and I thought I'll also include in our show so that you have some more clarity. So in simple words, we have some questions, some FAQs that I'll be answering. So first is, if I made loss in Bitcoin, can I set it off with profit in Ethereum? Now, this is, of course, in direct link to the set-off thing that we just explained to you. So the answer is no. If you've made losses in Bitcoin, you can't set it off against profit that you've made in Ethereum. Question number 2. Can cost of mining be deducted? Absolutely no. A big no there. Third question. When is the tax regime rolling out? The crypto asset tax regime is rolling out in the financial year starting April 1st. That is a few days from now. Now, provisions on the 30% tax will be effective at the start of the fiscal year. Your crypto earnings will come under the ambit of new tax rules from 1st of April. But what about the TDS? Provisions related to the 1% TDS will come into effect from July 1st, 2022. So there's a lot of buzz around this new update that has come, which is about setting off your losses against another crypto asset of yours. So we'll break it open to discussion with our guests. We have with us Uday Walia, lawyer, partner, Touchstone Partners, Ashish Anand, founder and CEO, Brew Finance. A very warm welcome to both of you. Ashish, to you first. This latest announcement, does it come as a setback to you? What is your quick reaction?
Hi, everyone. Thanks a lot. First, of course, this is not in line with the established principles of taxation. Mm-hmm. The Supreme Court has decided earlier that income includes loss. Here, actually, we are not talking about set-off against another set of income, or we are not talking about set-off for previous year's losses or something like that. We are talking about in the same asset class, what if I have income and what if I have losses? I believe this will be certainly challenged in the court and will not stand scrutiny in the court as well. Certainly a setback by the what legislation has provided for, but in my opinion, it will be challenged.
And I think it will be interesting to get an opinion from Mr. Walia here. So how does set-off really work with other financial tools, let's say stocks?
So, in general, the principle is that you can set off your losses against gains. So the basic principle is that you should be paying tax on the overall gain. You shouldn't have to pay taxes on each aspect of your income. So for instance, if in a Bitcoin you make a loss of 70 rupees and in Ethereum you've made a profit of 100, you should really be paying income tax on the 30 rupees, which is the difference which is basically the gain that you've made. But unfortunately, what they seem to be saying is that we're gonna tax you on the profit of 100. The loss that you've made of the 70 is your loss. It's for you to deal with. You can't then use that loss to set off against not just your profits or your gains from other crypto assets, but also against other stocks. Now, that's not the principle that's followed, and that's what Ashish is saying. Now, the trouble with challenges in court, etc., is that, look, it all depends ultimately on how the government and how clearly the government defines it. There remains the general overhang as to, are you going to regulate it? Are you not going to regulate it? The finance minister said clearly whether it's going to be banned or it's going to be regulated is a decision that's going to be taken later. We know, as we've seen in your clip previously, that the Reserve Bank of India is naturally against it. Not surprising. We were hoping for some sort of clarity on the regulation. That hasn't come through as yet.
Sure.
But I think essentially what they're saying is we're going to just tax all your gains.
Right. And great that you talk about clarity here, because, when this was announced during the budget session as well, the 30% tax, then the word transfer of cryptocurrency was used. And now a lot of experts also point out that, there's a bit of clarity needed on that front as well. What is transfer of cryptocurrency? Do you think, Mr. Walia, the question is for you, do you think government should come up with clarity on that as well?
I think transfer would be similar to what the definition is under the Income Tax Act. So any sort of dispossession or whether it's by way of a gift or sale would be covered. I don't think that is necessarily the problem. Potentially even, using it as security could potentially be treated as a transfer. So if you collateralize your asset, you create a mortgage or a charge on it.
Right.
But I think it's, those are, I think the sort of less relevant issues here. What's more important is, what is the asset? I mean, are you basically scaring off the market? Are you basically saying, look, it's all at your risk. There's going to be TDS, there's potentially GST. We don't know whether it's legal. You can't set off, as you had said earlier, you can't even include mining in the cost of acquisition. You're basically, you're not taking a very sort of friendly or a kindly approach to this particular asset.
Your topmost priority would be, clarification on the asset class bit of it, right?
I think, for me, the real clarity is that, we must, the laws need to be clear. So we need to know, and everything needs to be clear, because you can't tell an investor that, look, we're not even sure this is legal. It could be legal, it could be banned, but we're going to tax you, which would lead, the sort of ordinary assumption would be, well, if I'm going to be taxed on something, then it must be legal for me to buy it. But then the government is saying, well, we're not really sure it's going to be legal, it's not going to be, but we're still going to tax you. And we're going to treat every sort of aspect of your transactions as taxable. So, I think we just need, the real clarity has to be, is it legal? Are you going to tax it? Why? And if it's going to be an asset, treat it no differently from buying securities, other stocks or mutual funds.
Although that doesn't seem to be the case. Of course, it is going to get a special treatment is what we sense at the moment. But Ashish, to you now, I mean, what are the immediate things or clarity that you think you need as a part of the industry?
So major parts which we will see that happening there, where we need clarification. For example, government has included non-fungible tokens into the definition of VDA. Now there are non-fungible tokens which are purely digital tokens like digital arts and so on, which are very popular. But there are non-fungible tokens which are actually representative of certain real-world assets. For example, a house property tokenized, receivable tokenized, and so on. And in our opinion, that is a clarity which is needed over there, that whether they will be taxed as NFTs or whether they will be taxed as simple other asset classes. So that is one part which we believe should be important on that definition. The second part is which was alluded to by Mr. Walia about transfer. So one part is that a lot of derivatives products have come up on top of cryptocurrencies, right? We have decentralized finance, we have lending solutions, we have wealth solutions. Now, in a number of these solutions, you have to transfer the asset for a moment till the time that asset is blocked and you get another token. Say, for example, if I lock my Bitcoin on one protocol, perhaps I will get S Bitcoin or A Bitcoin, and I will have to keep that. Again, when I repay my loan after 3 months, I have to get back my Bitcoin and get this SBTC. So the second part, which is important, that whether these sort of things will be covered into transfer or not, because that will also further define.
Yeah, that's what I was essentially was talking about, a little bit clarity on transfer. But Ashish, last question to you. I also see a lot of crypto investors saying this, that okay, we will be entering a new financial year. So do I do anything at the last moment before we step into a new financial year? What would you say to those?
So I would say that spare off all your positions and open new positions in the new financial year.
And Mr. Walia, what would you say?
Sorry, I would just be cautious. I would just be cautious and say, can the government just produce the bill?
Okay.
And let's just get clarity on this asset class. And I think as Pinaki Mishra, the BJD MP, has said, it's an asset that whose time has come. By banning it, you're just going to drive it underground. You have to recognize that this is a very clever, innovative way of doing it. Whether it's hot air or not is different, but we should tax it.
Yeah, a few more seconds. Ashish, you were, I think, saying something, if you want to complete that point. So, what would you say to someone who wants to change the strategy as soon as they enter the new year, or maybe do something just before this year comes to an end?
So, because if you are holding any asset, I will suggest that square up those positions, create new positions in the new financial year. At least this financial year, you will not have to pay 30% taxation. You can try to get covered under other heads of taxation, which may be.
But keep hold of what they are holding at the moment.
No, first you square up the position and create new position in the new financial year. So, of course, if they have to keep holding, this will not impact the direction of the market. The government's decision in India will not impact whether the BTC or Ethereum will go up or down. So that has no impact.
Sure. Thank you so very much, both of you gentlemen. It was great talking to you. But now we are starting another segment, which is called My Crypto Query, MCQ. And we have another guest, Rohas Nagpal, author of the Crypto Playbook, Chief Blockchain Architect, Hybrid Finance Blockchain. A very warm welcome, since there are so many updates. And then, of course, we have several questions popping up as well. There are some generic ones and, of course, few linked to the tax thing. But we'll begin with this first query, which says, can we go to another country and sell crypto assets without paying tax? Very interesting one, by the way.
Sure. Well, technically you can, but legally that would be tax evasion. So unless you are a non-resident Indian or a foreign citizen, it won't make any difference. If you're an Indian resident, Indian citizen, it doesn't matter where in the world you sell it, you're still liable to the Indian laws.
Yeah, so you said it can be tax evasion, but can you really evade it? I don't think so.
No, you will get caught someday, because on the blockchain everything is transparent, and trust me, sooner or later the foreign exchanges also will pass this information to the government, and you will get into more serious trouble. You'll have to pay penalties. So I would request, don't try that.
Okay. Second query, will profits made before April be taxed if the profits have not been realized?
Well, that's a good question. So when you say not realized, what you're usually saying is, I have Bitcoin. I did not convert it to INR. I converted it to USDT or USDC, which is a stable coin. According to me, the tax would still apply. It does not matter whether you have converted into INR or not. Converting it into a US dollar stablecoin also would be realization. The only difference is, before 1st April, there is no clear law on the percentage, so you can probably file under regular business income. But 1st April onward, it is very clearly going to be under the 30% slab. So I would say I agree with some of the speakers in the earlier session. It may be a good idea to sell off your holdings now and then repurchase after the 1st of April.
That's quite an interesting tip. What if trading is in Bitcoin pair? Can we set off crypto losses? So, of course, there is another question to this. One, what is Bitcoin pair? And, of course, the second part is the question itself.
Sure. So, when we talk about pairing, let's say if you go to the neighborhood shop and you buy Parle G biscuit, they will say Parle G is biscuit, comma, Indian rupee. So, 5 rupees or 10 rupees. So, pairing simply means which crypto are you valuing another crypto in. So in the crypto market, whenever you go to buy a new crypto, you either buy it against Bitcoin, Ethereum, or a stable coin, or even INR. So logically, it wouldn't make a difference. Even if you are buying a pair of Bitcoin, because the prices are clearly visible, even though you have not squared off against, say, INR, but you still will be liable for the tax.
One last query and we'll play that up.
Do you think the cryptocurrency has the capacity to demonetize the world? And I have another question. How do we assess what are the risks and returns of cryptocurrency?
Sure. So demonetize the world, I wouldn't say, because see, cryptocurrencies ultimately are not issued by the government, but the monetary policies of every country is run by the government. So no country is really going to allow cryptocurrencies to replace their legal tender. It does not make any sense. So no, I don't think they will be able to demonetize. And second question was about valuation. I forgot. What was the second part?
So how do we assess new tokens and coins probably is what
Sure. So again, I will say use the ROHAS method. Look at the revenue or economic impact of that particular crypto. Look at the organization behind it, the history of the crypto on the crypto exchanges. Look at the algorithm and tech stack, and finally look at their social media following. So if you follow that, you'll usually end up picking the good one.
And very interestingly, you mentioned that, what should be the strategy, which I had asked other guests as well. And you said, what you can do is adopt a new strategy, which you mentioned. I want you to hold that for now because we'll get into the details of that after the break, and we'll also be talking about GST and cryptocurrency. So don't go anywhere. Keep watching Coffee and Crypto. Hi, you're watching Coffee and Crypto. I'm Arun Singh, and we will be talking about GST plus cryptocurrency. But before that, we want to talk about something that Rohas pointed out before the break. And Rohas Nagpal, Chief Blockchain Architect, Hybrid Finance Blockchain, is with us. So, Rohas, of course, we're talking about this new tax regime, which is going to be levied, let's say, from 1st April 2022. What should be the new strategy for those entering this new financial year?
Sure. So I would suggest that whatever cryptos you're holding on Indian exchanges, I would say immediately sell them off. And then you can always consider repurchasing them on 1st April. Because that's when the new Income Tax Act comes into force. So then you would come under the new law. So I would strongly recommend squaring off now.
So basically, even if someone is making profit in this financial year, so that's not going to affect their tax? Or let's say
what would happen is, because that new law is not yet in force, so whatever profits you're making this year, logically, they would come under the regular tax slab. But 1st April onward, they're going to come directly under 30%. That's the reason I'm recommending sell off now, square off your position, rebuy after 1st.
Sure. And now let's get into the GST part of it, because as per a report by PTI, the government is working on classifying cryptocurrency as goods or services under the GST law so that tax can be levied on the entire value of transactions. So currently, 18% of goods and services tax is levied only on services provided by crypto exchanges and is categorized as financial services. But this 18% is only on the transaction fees, as I also mentioned earlier, and not on the entire transaction value. So, Rohas, we've spoken about the current scenario, but do you think this will discourage the investors and exchanges if this was to come a reality?
Sure. It would definitely be, and I'd like to mention briefly the Amitabh Bachchan case which has just taken place. So Amitabh Bachchan had sold NFTs worth about 7 crore rupees, and then the GST authorities told him that an 18% GST is payable on the entire value of the NFT, and then according to media reports, Amitabh Bachchan has paid more than 1 crore in GST. Now the meaning of this is all cryptos are liable to GST not only on the transaction fee but on the entire amount, because under the new law the definition of virtual digital asset applies to all cryptos including NFTs. So if NFT is liable to 18% on the full transaction, logically even crypto becomes the same. So it is possible that from 1st April, when you buy 1 lakh rupees worth of Bitcoin, you would be liable to pay 18% on the entire 1 lakh rupees.
Although there hasn't been any confirmation from government side on GST part, I believe.
That's correct. But then the Amitabh Bachchan case very clearly says that the GST authorities told him to pay 18% and he has paid it. So I think that kind of makes the position very, very scary. And I wonder what is...
We've run out of time, but a quick question. If you trade outside of the country then?
Well, in that case, most probably GST will not apply.
Okay, so definitely we would like to discuss this in detail in some other episode with you, Rohas. But that's all the time that we had for this episode. Thank you so very much for joining. Bye. And with that, it's goodbye from my side. I'm Arun Singh. Keep watching NDTV.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.